Welcome to Hedge Heads, brought to you by American Federal Bank. John, what are we talking about today?
We're going to do specific sales numbers for corn. So if you're looking for a level to sell corn at or number, I got a futures number that I'll shoot out there. We're going to talk corn spreads, what they mean to the price action, kind of a continuation from last week, beans, cattle, and then we'll talk about the biggest fish that we've ever caught at the very end.
I'm sensing some bullishness.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, almost exactly a year ago, I believe I accused you of being a corn bull.
We made a bet.
Yeah, and I took the under and won a beer that still has not been paid.
Yeah, I owe you a beer. I think a close over 460 for March corn, and we fell short of that, and then it went up to 510, of course, after the bet window time frame was gone. But
I took into account end of month, end of year.
Yeah.
And you did not.
So it was about a year ago, we were talking about this very same thing that's happening again this year.
Well, the reason I bring it up is we were chatting prior to the show, and I'm accusing you of being bullish corn again. The Perma bear is becoming a corn bull.
Well, this is a market that I do like. Everyone's given up on it. It's we're never going to get out from under this. Even the Southern Rust guys, you're going to see it in the yield. They've kind of given up. Not that we can't go down in yield. We had another report today, and showed the ending stocks getting dinged up. This is exactly what was happening last year. Although last year on paper, much more bullish than this year. We're already probably at 1.5 and going down every report. We're still at 2 billion bushels. So bullish, there's different shades of bullish. But I do like a market that everybody's given up on, except for the Perma corn bulls, which there's so many. I mean, we're not going to go over who's what, but I mean, you'll see them on X. They never think corn should go down, and they're always around. But what's happening here is you got a demand-led deal, and what they're doing is cleaning out the pipeline. See, everyone's looking for the latest, greatest indicator, all the stuff. And in the last episode, we talked about how spreads can help you. Now, December, March it's basically done. December's done, and it's at -7. So that shows you, it means December is 7 cents under March. It shows you that there is not too much corn in the pipeline, and this should be one of the months, especially with this size of crop, where there should be a lot in the pipeline. In 2024, where we trended down basically in the spring, and this spread had widened out to like -14 or 15 or 16 in deliveries, and it did not, and that meant there was too much corn in the pipeline, and the price action was poor. So this would be considered good. -7 was last year. We have even better demand. We're chewing through the supplies. That's how you get rallies, is cleaning out that pipeline. Again, the commercials aren't going to say, hey, we thought there was going to be too much around, and we bid everything really low, try to lowball everybody, and we didn't get enough corn. So if you just hang on to your corn for another month or two, you're going to get paid way more. They're never going to say that. It's going to start showing up in stuff like this.
I'm waiting for that postcard.
Yeah.
I want to get that postcard in the mail. Hey, just wait 2 months, and we'll pay you 40 cents more.
I messed up real bad at work, and I didn't get enough booked. Just hang on here, and we'll pay you way more. You're going to be waiting a long time for that indicator. What you got is the spreads up front and basis. Both are improving so far, but here's where it gets interesting. Last year, this is where it started to diverge. So we're moved on to March, May corn. That is the March contract versus the May. And that's about -7.5, -8, which is also where it was this time last year. Very, very similar to last year. Thus, going back to last year's episode, talking right before corn took off, there was indications this sort of thing was happening. Last year was stronger just because they started moving some of the other spreads earlier. But back to March, May. So it's at -8. Now, December 19th, 20th is when this thing took a nosedive last year. It went from -8 and all the way, I think, into the end of January, went to about -14. this is where the Y in the road was last year for corn. It didn't go down that day. It took a long time for it to widen out, but it was your first indication that all this corn was moving into the commercial pipelines because the price had come up quite a bit and guys simply sold a lot of corn. That got in the pipelines, and then from then on out, they did not have to bid very much to get the corn. So that's why it's so important. It's a very simple concept. Last year, tipped your hand a full month and a half before the high, but there was problems starting December 20th with the spreads. That was the first indication up front something wasn't right, and then it only got worse. So that's something to watch. You're going to want to watch that spread right towards the end of December. Is it starting to widen out? Is it starting to narrow? And that's going to be your gauge on trying to time the market for better sales into this rally. That's what I would use
so that's
personally.
H26 versus K26.
Yes, March contract.
Put it on a chart over, and you're watching up or down. I mean, it doesn't matter that it does matter to a certain extent, but it doesn't matter that it's -7 or -12.
Yep.
It's the direction it's going, right?
Yeah, and then you have Grain Informant or Foreman. He's on Twitter. Now, you can sign up on his email thing, and you can get the sheets for the basis on the regional stuff out east in west. He's got it in different categories, and you just simply you choose in the email which sheets you want to get in there, and you could start following basis to some degree. You don't have to sit on it every day and watch it. Just kind of see where everything is around the country, and then those are your clues. And like I said, it's you're going to want to start following better information to get to market better. If you continue to follow the mainstream stuff, you're going to struggle like you always have. It's not like you're going to listen to one of the talking heads and then suddenly it's all going to start going good for you. It just doesn't work that way. You have to read the subtle cues and see what they need in the commercial channels, because once they need it, they will start bidding it up in basis, or you'll start seeing the spreads move, and then you can unfold larger moves ahead of that. So what are some targets for cash sales? I think 172 is my March target. That's an actual number that I said. I mean, that's something, if I had corn in the bin, that's what I would aim for.
You just said 172.
472. 172, we'd be in deep trouble.
We would be in deep trouble. I just wanted to make sure that you did mean 472.
I did.
Then I thought you were maybe waiting for the spread to you wanted that spread to go $1.72 over.
I can't think of anything 172 that'd be good right now. Cattle or anything. Wheat.
Soybean, July, December could go. That's been 172.
Yeah, July, November could go up there.
November could be there.
No,
It
definitely
won't be
4.
this year.
4. Yeah. The one is probably because I'm looking out the window and there's a big blizzard, and we're trying to record this before we get trapped in the studio. But it is.
Just think about the episodes we could record, John. If we could
do endless episodes. What we need to bring back is the famous trading saying, "We'll do one a week at the very least."
Yeah. What do you have today?
We'll have to use one of the oldies but goldies. Trade wheat, sleep in the street.
I mean, after today's report,
there was.
Do you want to talk wheat from today's report? Because that was brutal.
Yeah, there's just nothing good. The wheat. We hardly ever talk wheat, and there's a reason for it. I mean, I love the inner wheat spreads like Kansas versus Chicago, Minneapolis. So if you want to talk any of that stuff, I'm always doing it. But it doesn't do anybody any good when wheat just does what it does. Like, yeah, there's support levels and there's this and there's resistance. Wheat just sometimes goes and sometimes it just goes down all the time. Those are the two gears that we've had, like just kind of straight up vertical up towards $6 and then down towards, like it likes to get in the 90s and then bounce out of there. And we've just seen this for now years. Something will come along and change it, but nothing in that report's going to change anything anytime soon.
Mm-hmm. No.
Plus, Argentina just dropped the tax. That doesn't help wheat, corn, or soybeans, especially wheat. So we'll see. We'll kind of keep our eye on that. But what you want to keep your eye on is that March, May for better corn marketings. Could it stay at -8? And what would that mean? It sure could. That wouldn't mean one thing one way or the other. It would show you that about the same amount in the pipeline as right now as there is later on. It's a neutral, slightly bullish signal. It doesn't need to go to 0 to be Like if this goes to zero, it's probably very bullish. So that's something if, we hadn't talked about, if this moves up or even gets inverted, that's highly unusual. We'd cover it in episodes, but you just don't want to see it go down. Down means your buddy or your neighbor or everybody's selling corn and it's starting to fill up the pipelines. Sure, it can go back and forth. It's not just directional, but you don't want to see that widen out. And we have a date last year because we have a comparable year this year to the amount around and, the yield and all, even though it's higher this year. So you want to see if the same pattern's happening as last year because these are similar. And then the beans, we'll definitely talk a little about on the beans. The bean side of thing, pretty predictable actually. The funds are completely wrong on this. They had bought beans and they were selling corn. Not every single day, but that's mainly the way they had positioned themselves. So they were long beans. The trade deal came out. They're not buying enough, to change the numbers that we know. And the funds got bored of their shiny new toy. They realized maybe we shouldn't get to a price where we're, taking ourselves out of the market for the rest of the world. So a much needed correction in beans. The question is, and I've been getting calls, do I sell the beans here? I feel like if you didn't sell it on that rally, now you might as well wait for the South American weather. What do you think?
I think you have to. I mean, if you miss this rally, now, I'm not saying there's going to be one later.
No.
But your hope now, I don't want to say the only, but I'm going to say the only way it's going up is South American weather.
Yeah, and China,
at this point right now, because the numbers don't look good. China has its own issues. Yes, they're buying, but they're not buying
enough.
Nearly what they expect. And what was priced in was significant buying, which isn't coming through yet.
Yeah, so, they have no reason to buy that many either. That's
the other thing that I'll say is I've been paying attention on the option side. As this has gone down, so has the volatility.
Yep.
Which usually the implied volatility, I shouldn't say usually, but often on a big move down, volatility is going to go up.
Yeah.
In this case, volatility is going down, which to me implies
that all the good news is in there.
Yeah.
Or there's no weather threat, that they don't think it's going to move around a lot, and it's probably right. So if you hadn't sold it, you might as well wait and see what a few weeks of the South American weather. Now you have the gap at 1060. Everybody loves to talk about gaps.
Everyone loves the gaps.
Everybody loves the gaps.
They do eventually fill.
Oh, 100% of the time.
But it could be years.
No, it just, it's like
months.
It's just one of these tradeisms that people love. And it used to hold more weight when it wasn't open at night and there was pits. I think it had a little more weight then, but people love to talk about the gaps. I mean, you go online and you're going to hear about gaps all day long. Anyway, there's one at 1060. Probably could get filled. I was just
going to say, guess what puts I'm holding, John?
Yeah, 1060. The gap puts. It could easily get filled, but it's not just filling because it's just a gap. They don't all get on their red phone, all the hedge funds, and call each other and be like, let's shoot for the gap. Are you with me? No, that doesn't happen. There's no bat phone. They do for the options too. So if it's a round number, they all get together to try to get it at this number. See, I'm being a little facetious here. It's not likely that happens. Do certain round numbers attract the price? Absolutely. Do gaps attract the price? Probably. But they love talking about gaps. And that's at 1060. So if it's not holding here, it's probably going to 1060. And at that point, there's really no fundamental reason for beans to run down a lot more than that. Although it can, but fundamentally there's not. And in my mind, you had 81 million acres. We don't know what the yield is for sure. You have this China deal and you have the South American weather. If there was every year I was going to go for it into springtime, it was this year. And if it doesn't work this year, we're going to have a hard time making it work any year.
Yeah, I mean, it's not like we're going to plant less bean acres this spring, right?
No, it's not going to be less. And the great debates are beginning on acreage. It won't be. So right now, cue the acreage battles. That'll start, and they'll fight back and forth. 93, 95 has been a kind of the fight back and forth today. And then it won't be long after that until the drought talk starts. That's usually mid-January into February.
I'm surprised the drought talk hasn't started already, just with the bullishness around corn right now.
It will. The drought talk will, and I'll be honest, it is actually really dry here. It was last year. It was just as dry, but things had dried out. And if it doesn't rain this spring, of course there could be a drought. But that's the seasonality that we have. But they'll start arguing over acreage right now. The truth is, no one really knows. A lot goes in to that 3 to 5 million acres that swings around, and we don't have the puzzle pieces yet. We don't know what the inputs are going to cost for sure for everybody. We don't know what the rotation's going to be, the changes. You don't know what the price is going to be on the final finish line to plantings, and you certainly don't know what the weather is going to be. But we'll use 95 million acres for corn, and then I think it comes up 4 million acres for beans. So there's going to be more beans next year, less corn. But here's back to corn really quick. I love years like this where they think it's going to be just like last year because the weather was perfect in South America, it was perfect in U.S., and now everything's priced that way. And I go back to the September options. They have an entire summer priced for 24 cents right now. Well, call it 30 cents at the money, 24 cents for 10 cents out of the money for all this growing season, all South America's growing season and our springtime and our growing season for 24 cents, 10 cents out of the money, which means they don't think this corn crop can move up more than 34 cents in between now and August. That seems really cheap to me. That I've been saying this. The implied volatility, I went and looked.
Not a recommendation.
No, it's just everyone sleeps on markets like this.
Right.
Like they act like because this happened last year and they have a really short memory, it has to happen like this year. We could have weather scares that might not amount to anything but a lot better price to hedge at. We might have a weather scare that amounts to a whole bunch. We might have world events that amount to stuff. We might have the South American second corn crop burn up. You have no idea. No one does. What I'm saying is they have already put the South American one in the bin, and they put ours in the bin before we even planted. When the real numbers are going to be 95 million acres, some crazy high yield they're going to tack on this thing, and we end at 1.7. So in my mind, if we're already at 1.7 next year, and we have to have perfect weather, these options start to look really cheap. And that you steer me down towards the bullish path here. I didn't think I was going to get here.
I hear the corn bull coming out.
I can't help it. It's out. It must be a seasonal deal. I see the snow fly and I get bullish corn. But same thing happened last year. That's the truth. There was things that kind of tipped you off. What's way different and that could add a lot of fuel to the fire is the funds bought aggressively corn this year. This year they bought beans like we mentioned. They're wrong. Now beans are coming down and they might switch their bets. And if they switch their bets to corn, it's we have all that fuel, or I think we do. When's the last time a commitment of traders report's even been out?
Yeah, that's a good question.
We don't even know where they're at, but we assume they're still negative a bunch of contracts. I think it was like 90,000 last anybody knew. And if they turned around and buy 250 like they did last year, then we have something. But this started the same way last year. This year the demand's even better. And I'm really impressed on the on-farm storage. I mean, the thing disappeared very quickly into the countryside. And, of course, the mega bulls will tell you that's because it's not there.
Right. At some point, you have to believe the numbers, but they're not always right. How about that? You have to trade the numbers. You don't have to believe them. How about that? Is that the right way to say it?
Yeah, exactly. You got to trade the numbers. You don't have to believe them. The basis and the spreads will tell you, and then in a year, if it isn't out there in a year and a half from now, we're going to have a mega bull market in corn. You'll get paid then. That's the way it worked in 2019 into 20. Yeah. And that's, so I think that it's probably somewhere in the middle. Like, do I think we have the yield they say we have? Probably not. Do we have the feed and residual use that we have? No, that's too high. Exports, they fixed this report a little bit. They brought up, but then you got to maintain that pace. So there's a lot of moving parts here. It's likely we're going to end at 1.7, 1.8 this year if exports stay the way that they're staying, and yield comes down a little bit. I mean, that's so. Can I just can I throw a realistic number out there at you?
I would love a realistic
1.85.
1.85.
What does that mean for the price?
Yeah,
well, that's why I kind of have my target that I told you on the 472 on the cash side of stuff. This is not futures. Well, of course, it's the futures contract, but on the cash side, that's where you would maybe be making some sales, or at least thinking about it. So instead of 510 last year, 472 this year. I mean, what do you think?
I hope inputs are down considerably at that price, but
Yeah, and that's really, you throw that in the mix, and what is everybody going to plant? I don't know. We'll just be entertained by everybody arguing what everybody's going to plant, and then it magically comes out in March, and then everybody argues about that number for quite a while too.
Right. So last year, I mean, if we're going to compare, you got Bullish the same time. There's a lot of correlation to last year right now.
A lot.
We made the high in February last year.
Mm-hmm.
Now, we know that South America had perfect weather. We had near perfect weather.
Yes.
That's what could be different this year then, where it may not. What do you want? I mean, that's why you're watching this spread.
Yeah, and now I'm watching corn spreads. Like now I've done it all. I'm watching the beans. The bean spread we're currently watching. I've not given up on the July November at all. Watching that one. But the July, December, the famous spread from last year, which absolutely creamed me on the way down because I was bullish, and then it was a fake market and it fell apart. But that thing is now, instead of whatever it was probably 13 by this time last year. This morning was -7. So there is corn spreads to start to follow now. Is that something maybe we want to get into? You'd have to call us and we'll tell you exactly what we're doing. As a matter of fact, the clients that are clients of Blue Creek Commodities got their sheet this morning on corn. That's sheet 1 of 2. I got more corn stuff coming out. So it's got hedge ideas, spread ideas, and just outright option specific trades. Give us a call. I probably can get you a sheet or email us and we'll send you out a sheet if you're not a client. But that's where all the, what we can't get into on the air actually ends up is in the sheet emailed to the clients of Blue Creek. And then quickly before, I don't know, do you have anything to add on the grains?
Not on grains. I was super excited because you mentioned hog spread, and I like volatility and craziness and fun. And
I found a hog spread that's not volatile at all. So call me Mr. Careful. What this is it's been grinding down. It's like, so now we if hogs look underpriced, and they sort of do to me, but it's seasonally kind of a bad time of year. December is one of the worst months. So, but is there anything that a guy can bull spread? There is one bull spread. I love it out there. The rest, if you look at the seasonals, is all bear spreads. So I'm not so interested in the bear spreads this year, but there is one bull spread that I like, and it's crept down to levels. If it goes 30, 40 more cents, I'm going to get in, even though it's 3 weeks early. But in 3 weeks from now, I'll send out a sheet on that too. There is a hog spread that I do like. I'm in it every single year. It's my favorite hog spread.
And obviously we're not sharing it because the number of people that trade hogs, 1, is slim. 2, we can't give recommendations.
And it's actually kind of
3,
it's thin. This one, actually, we can move the market. Bids and asks matter in this one. So I want to sneak in when no one's getting in. Obviously, clients first that want to get in, and then me last. Because that's the way it's got to work. But I am going to try to sneak in here when no one's looking. And it's actually one of these that it's a little more deferred, and you put in a 5 lot in there, 5 contracts, and it's noticeable in the order book. But it is it's old reliable, I call it. It's actually kind of last couple of years.
Sounds like trading butter.
Yeah, that's if you want action. All right, hogs, though, you're not wrong. If you like action, that's where to be at. Cattle, a lot of volatility back in cattle, but again, the government was talking about getting beef prices down this week. They've mentioned it every single week. The first loads of beef from Argentina got here, or rumored to get into U.S. supplies. Australia's coming. Brazil's coming. Now, people ask, is it going to be more than normal? Absolutely. When the egg shortage happened and then Trump got elected, they ran on lower egg costs and all that stuff. And one of the first things they did is import from every single country they could possibly import from, new or otherwise, and they got the egg price down. That's exactly what they're trying to do to beef right now. Be it right or wrong. Obviously I'm not one for market manipulation and government involvement, but you can't deny that's what they're trying to do. So would I recommend looking at hedges? Absolutely. And that's what I'll say about cattle. We have a nice little rebound here. I don't want to get on the fundamental argument side. There's not a lot of cattle out here. They're going to try to cure this beef price in a different way, and that's importing a lot of beef. The first beef from Argentina got here, And if it's to be believed, there's lots more coming from a lot of different countries. I know that's not what a cattle guy wants to hear, but I would trade what they say they're going to do because they don't want to be running on high beef prices when they said they're going to get them down. I'm not a fan of this, but it is what it is. Are you seeing anything fall in the grocery stores? Any price?
I haven't looked. I'm going to be honest.
I know. I kind of skipped the beef section lately. I shouldn't say that, but
Which is maybe that's part of the.
I'm just walking right by. It's not come down. No, everything's very expensive still. And they're looking into the price fixing and all that. Hopefully they figure it out and there's not a big monopoly. Maybe box beef can come down and maybe the producer can get paid. Maybe they can figure it all out. But I have my doubts. It's the government.
I will say we just ordered another quarter not that long ago, and it was slightly cheaper than the last one, but not by much, and not significantly.
And the sale barns certainly aren't calming down. If anything, these guys are bidding with anger now. It was bad enough before. Now they're saying this should never happen. There's no cattle out there. I'm going to bid twice as much as my neighbor. I don't think that's probably a good idea, but I could be, you could be laughing at me maybe in a few months from now.
All you need to do is hedge. Doesn't matter what you spend.
And then I looked at hedges, and you just go, you look at like an August put $9 out of the money, and you're gonna pay $19.
Jeez.
Which is going to be just a shade under $10,000 per put per 50,000 pounds. So to be in the beef business right now could not be more high risk. I mean,
bring your checkbook.
Yep. If you're going to be buying the sale barn, bring your checkbook. If you're going to protect them, checkbook. I meant everything. The only thing that isn't expensive is feed. But if my hunches are correct, feed might get more expensive too into the springtime. So.
And I thought owning a boat was expensive.
Yeah. Speaking of, there's a broken rod. You see that? That was an expensive rod. So there's shocks in the rod locker, that hold it up.
Yeah.
Over time, they weaken up, and I was going to change them last winter, and of course I didn't. Down it came just like a guillotine and just cut that rod not in half, cut about 1/8 of it off.
Oh, jeez.
That was a very nice rod.
You might never catch a walleye again.
I know, because you got to spend a lot on electronics and rods,
rod.
Otherwise you can't catch fish. Everyone knows that.
Yeah, I mean,
$120,000 walleye boats and $30,000 electronics. If you don't have that, don't go fishing because you can't catch anything.
I know you don't want to hear this.
What's that?
Because it wasn't in a tournament I fished with you, but the biggest walleye I caught this year was just over 28.
Where was that?
I'm not telling you where it was, but I was crappie fishing with my 5.5 foot ultralight on what did I have? I think a 16th with just a twister tail. So, all your fancy rods and electronics, I was just trolling for crappies.
My biggest one came in the middle of a hot summer day on Dead Lake, July probably. Reeds in maybe 5 feet, casting for probably bass with a beetle spin. And I think it was a 29.5-inch walleye. Not where you would have thought, probably on a Snoopy pole. Actually, I was a little older. It was a regular, probably like Fenwick or whatever. But you don't need expensive equipment.
But it sure is more fun.
It is, and you get bored in the winter and you think you need it all, and that's when you start ordering stuff, and then you use none of it in the summer. You just go right back to your old techniques. That's what I do.
That is one way to do it. Well, let's wrap it up there, John. Leave your number.
Yes, 218-731-1578. And if you want a copy of that, I'll see if I can't get that emailed out to you.
Excellent. Thanks, John.
Yes. We were talking about, it was the famous Are You Getting Bullish Corn episode.
Yeah. Yep.
So we're going to, the same thing's happening this year. And then
the famous Are You Bullish Corn? And guess what? I can go back
and then the bet. You say you stole me a beer.
Oh, you do still
for the bet.